I'll just go back to the basics here. When it comes to trading a market like this and investing in a market like this, you only ever play at the extremes. Just don't touch the market when it's in the middle of a range.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show.
Welcome back, everybody, to another 1000X podcast. We're coming to you live from New York and LA to talk about a slow market day.
Slow market day, but busy market in general if you zoom out a little bit.
Yeah, today was, there's a little bit of up, little bit of down. I mean, if you look at like a 12-hour chart, kind of nothing's happened since Saturday. We've just been chopping in a tiny little range, but before that was just absolute pandemonium.
Yeah.
I mean, we tested that 75K level twice and held it. We recorded that absolute banger podcast with Felix where we said buy with both hands, and then the market proceeded to rally. And now we're sitting 10 to 15% above where we talked about that. And so I guess the question that's on everybody's mind is, what do you do now? Like, what are you supposed to be doing with these gains? My answer is that we have not left the high vol market environment yet. Like that, we are still in the craziness, even though we've taken a little bit of break. So I think that cash, again, is extremely valuable when you're in this type of market. And you should be, if you bought anything lower, if you added to your stack lower, or if you made a trade and this is your trading capital, you should be at least, in my opinion, 20 to 50% lighter with that capital that you bought earlier. If you bought anything, just because there's a ton of vol right now, and the probability that we trade 78K again is reasonably high. It's not zero, right? It's not 5%. It's probably 30-40% in the next month, but it's also probably 30-40% that we trade 92 in the next month or so. I just think that there's a lot of vol to be had. This is, I think, where we go into chop and recover mode. But Jonah, what do you think?
I mean, I it's hard to disagree that we're going to be in a range for a while. Does seem like a good idea to start trading around the range. Just one little addendum to your point about maybe taking some profits if you bought lower. I don't forget to tax loss harvest if you bought higher. None of this is tax advice or financial advice, but check with your tax advisor and see if you can harvest some losses here. That's always a good thing to do when markets pull back, because that's free money. That's free money right there. Short-term capital losses can be harvested against ordinary income, to the best of my knowledge, from your W-2 job if you've got one. So all of that's very, very, just extra ways to add to your stack. I think that I'm sad to say that I think you're right. I think we are heading into a choppy range. I think we're in the middle of it, so I think it's kind of a weird time to lighten up, but maybe you're right. Maybe we're headed straight back down to the lows. You talked me into buying some of the Hyperliquid, by the way. I really like that one. My portfolio now consists of 3 line items: Bitcoin, Solana, and Hyperliquid. And I'm debating whether to just liquidate all of my Solana and get it and move that capital over into Hyperliquid. That project seems like it's got real legs, mainly because of the element.
I mean, it's as simple as if it makes money, it's a better project than the projects that don't make money. I mean, it's a reasonably straightforward thesis, is that this thing is making money hand over fist, and there are just not that many other things that do.
And not only does it make money, it attributes that value back to token holders. Like, there are plenty of projects out there that make lots of money, like Curve, where the token, if you hold the token, like, it's just, you get some voting rights or some useless crap. Like, why should anybody? Hyperliquid actually dividends the money to the token holders in a legal way.
I do think that, and hopefully I'm right, but I do think that's going to change over the next year or so, which is why, again, I think one of the things that you can do when the market pulls back like this, like if you're still interested in trading crypto, is you can start to accumulate some of the things that you think will have a good 3 to 6 month trend. And if you want, you can short the things that you don't like against it. Like, for example, one of the things I'm doing right now is I'm slowly accumulating everything in the RWA world, and I'm shorting ETH against it. And I'm trying to focus on the things that are actually making money, like Curve, with the idea that at some point in the future, they're gonna pay back their token holders. Like, they're gonna take that revenue that they're generating and they're gonna pay back their token holders. Like, slowly accumulating some Plume and Pendle and Curve and Aave and Ondo again, and Maker actually as well, and basically just shorting ETH against that, or sell, or you could borrow ETH to go buy those things. There are a bunch of different ways you can go structure it. Just make sure not to get too over levered. When you're doing that, you don't want to be, you don't want to get into too much trouble there. But yeah, I mean, I think that trade plays out very nicely in 3 to 6 months.
I like the way that trade is structured. Like, I would hate to own those assets versus US dollars, because you could take a ton of pain before, the tokenomics change. But versus ETH, like, just based on my limited clicking around during your dissertation there, it does seem like a lot of those assets trade kind of lockstep with ETH, probably because somebody's correlation algo keeps them in line.
They've been outperforming. I mean, Grass has underperformed. That's another one that I added, because that's actually making real revenues. The founder accidentally disclosed actually that they were making mid 8 figures in revenue. We got to figure out how to get that back to the token, of course. But all these things that are revenue generating, that have some sort of thesis that will crop back up again in the next 6 months, because I mean, that's just how crypto goes. I mean, at some point in the next 6 to 8 months, there's going to be, a 2-week mania of RWA assets, and probably a 2-week mania of AI assets, and probably a 2-week mania of L1s again. I think at some point in the next 6 to 8 months. And so now is actually a reasonably good time to start accumulating them. And the reason I'm shorting ETH is because I don't know if the market is done going down yet. I mean, for all I know, ETH trades 1,000 this year. And I'd probably buy it back there and then start writing these things outright. But kind of until we're in the trend up market mode, and when we're in the chop zone, there's kind of no reason to do anything other than pair trade. You basically buy when things are like at the lows of the year now, which a lot of these things are not. And other than that, you're not going to ride these things outright. In my personal opinion, it just doesn't make a ton of sense.
No, I agree. You can't ride them outright. Yeah, you can't. They're like, alt season is just too. It's never coming, and these alts are too dangerous. And also, like, if you're waiting for tokenomics to change, you're playing a game of chicken with the founders of the project, right? Like who's gonna sort of swerve first? Is it the token holders or the founders? The founders by now should be like, it should be crystal clear to any crypto founder that if their token is not getting actively bought back with project revenues, it's just a meme coin, and the meme coin cycle ended like mid last year. So their token is going straight to zero. And yet there's still this human greed element where, like, a founder, even looking like $0 per token in the face and thinking to himself, wow, my token is going to get deep donkeyed by the market if I don't change something. Like, it's still this like deep-seated lizard brain human instinct that says, no, hey, like, clutch as many pearls as possible. Like, don't let anybody else get the revenue. I want to keep it all for myself, which is, and like by now, like watching Aerodrome just destroy Uniswap on Base, or watching Hyperliquid just destroy its like on-chain competitors. Why? Because they do buybacks, right? Like they attribute value to token holders. Like it's like the playbook is so obvious, and yet what are these other projects doing? Like, I'm talking about viable projects here that generate real revenue. Why aren't they doing more buybacks? Why do you say 3 to 6 months? Is there something behind that, Avi, or is that just like your gut feeling?
It's been, I mean, candidly, I just pulled it out of my ass.
Okay.
But I do think that's what gives the market enough time to digest what's really happening, because basically the thesis right now is because of these tariffs and because of the way that Trump governs, it is much harder to do business now, actually, in a volatile environment. We're not really sure how the tariffs are going to affect consumption yet, and that all of that uncertainty and degradation of consumption is going to lead to the economy turning out poorly, or starting to see data come in badly. In 6 months from now, we're going to know if that's played out. And so basically, either we'll be in the middle of a spiral, or we'll say, okay, looks like actually nothing really bad is happening. Time to go up now. At some point in the next 6 months, we're gonna figure that out.
I think we're going straight back up. I'm so bullish on like risk assets over that time period.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
Even like in the next month, you think that there's a much higher chance that risk assets go up than go down?
No, next month I'm with you. I think we get like wild volatile chop. But 6 months, like Trump's not Xi Jinping. Like he doesn't have a lifetime to figure this out. He's got 6 months. And if he doesn't have it figured out by 6 months, he's going to lose the midterms in a big blue wave, because the Democrats will credibly, like the Democrats are a headless chicken right now. But if this continues, they'll be able to come into the midterm election like, look at what happens when you elect Republicans. They just do random things that screw the entire economy and send us into tailspin chaos. Like what?
Correct.
Why would you vote for a Republican? And that's a very good stump speech to give. The Democrats will win in droves, and then Trump will be a lame duck for 2 years. And your quote is Trump is pro-Trump, right? Like if his goal is to be on Mount Rushmore, like he's going to be more like Herbert Hoover. His legacy is going to be more like Herbert Hoover than Abraham Lincoln, if he sends the economy into a tailspin and then gets his executive authority basically blocked by a Democratic Congress for the final 2 years of his presidency. Like that doesn't make any fucking sense. So obviously he started this whole chaotic spat of volatility with a Rose Garden speech. He could end it with a tweet. And we already saw him back down. Like this is my thesis, Avi. My thesis was that even Donald Trump doesn't have the balls or the mandate to see the economy into a proper depression in order to do what he wants to do. And we literally saw him flinch. He just flinched. He just tweeted the market back up. Like Truth did. He literally posted it back up, and he's just going to keep doing that.
Here's the thing: he's just really going hard after China. And while I agree with your statement, Jonah, that he blinked when it came to the rest of the world, he blinked. But I don't know if he's going to blink with China. I mean, he really wants to fucking stick it to them. And this guy does have a pretty big ego. So I think it's not improbable that things crash again. And you can see, I mean, let's put it like this. You can see a revisit of the lows in the market because he's decided to really stick it to China.
Yeah, because there's like no more bilateral trade between China and the United States, like 300% tariffs. I could totally agree with you, Avi. This could totally devolve into like a third grade playground style tit for tat with like 0 adults in the room and people, Xi Jinping and Donald Trump just like hiking tariffs on each other, tit for tat. Mm-hmm. Like, yes, that could happen. Yes, that would be bad for the economy. But that can't happen simultaneously with Trump shutting off America from the rest of the world too. So basically what this could be is the beginning of the creation of like an East versus West hemisphere. Like countries are going to have to pick, like, are you trading with China? Are you trading with the United States? Are you kind of like sleeping with both women, or what do you want to do? And that, this could be the beginning of the big separation. I don't necessarily believe that it will send markets lower for a variety of reasons over the long run. Over the short run, we could get like wild chop and some crazy like V-shaped plunges into bear market territory that quickly reverse. But like over the medium to long run, I don't think markets go down on this. I think it's just it's like volatility, but not necessarily bearish.
Yeah, I think. So I was reading a note put out by Peter Zahan, who's sometimes a bit of a quack, but I think
I like his
makes,
books.
but I think makes really good points here, which is that this basically goes until the rest of the world chooses whether they're going to gang up on China or not. And what Trump's trying to do is he's trying to force people to make that decision. And this game comes to an end when everybody makes their decision. And
it's a no-brainer decision.
But I mean, that's what I hope too, as an American. It's a no-brainer decision. I think China's been abusing the world. I don't disagree with Trump that China has been taking advantage of the World Trade Organization and been taking advantage of global trade for a very long time, and basically playing dirty versus all other countries. Now, what I'll say is that, from our standards, they play dirty. It's just that we choose not to play the games that they do, right?
Yeah.
That's really it at the end of the day. And it's a system thing. Like it's much harder for liberal democracies to play that game. But if we wanted to overthrow our republic and install a fascist dictatorship, we could do it. Probably don't want to do that.
No, we don't. I mean, you have a good point, right? Like,
so from that perspective, I do think it makes sense for the rest of the world to team up with the U.S. But I think that there's also this idea that the U.S. is a dying power relative to China. And do you want to join the rocket ship, or do you want to get on the sinking ship? Is, I think, something that people are weighing right now. And unfortunately, I think a lot of people do view the U.S. as the sinking ship and China as the rocket ship.
I know a few people who feel that way, for sure. Like that is. I mean,
every single Chinese person I know feels that way.
Yeah, but they read state-controlled media.
I mean, even the ones, even the Chinese Americans that I know, they all think that.
Oh, I know a bunch who don't, but those are the ones who fled the People's Republic of China for repression reasons.
Right.
Put it this way, Avi, you're right. We could, the United States could certainly play the same games that China plays, but we don't. And I actually have experience doing business in developing countries, some of which, physical oil business, some of these countries would be considered as like warlord run tin pot republics. And my experience trading physical oil in those countries was like, wow, look at what you have to do to get a barrel of oil out of the creeks in Nigeria. Like, you have to basically bribe every single person along the way. Like, what a horrendous system, and just enrich, line the pockets of people who touch that oil. But then after a while, I was like, well, who am I as a Western business person to comment on the Nigerian style of doing business? Like, that's just how things work in that part of the world. It's not unique to Nigeria. There are lots of parts of the world. Like, bribe is a dirty word, but we could come up with like a synonym for it that, you could call it like, you could call it like spreading the wealth, or like socializing the income of the, the asset, the crude oil, the physical assets. Like, call it what you want. Like, there are differing business cultures around the world, and doing business with Chinese people in China is very different than doing business with Russian people, which has its own challenges. Similarly, there are challenges dealing in Iraqi Kurdistan or Nigeria or anywhere else. So who are we to comment as Westerners on how China chooses to do business? However, there is a reason why like certain types of capitalism enjoy Cambrian explosions of success, and others just kind of wither and die. And I think it's probably easier to collaborate with actors who are, adhere to the letter of the contract that is signed, rather than those who don't. And I would put China in the category of those who don't. I would put the United States into the category of people who do. Obviously, under Trump, U.S. trade policy is more unpredictable and volatile than it used to be. But I don't think there's like IP theft going on, or any of the dirty tricks that the Chinese have used. State-sponsored industries flooding the world with goods, and currency manipulation to basically stop out manufacturers in other countries to centralize it all in China. Like, I don't think any of that's going on in America. And so I think if you do basically decide to get in bed for the long run and get married with China as a trading partner, you are effectively subjecting yourself to a style of capitalism that for which there's no precedent of success, right? So to me, that's why it's an obvious decision. You're on mute.
I'm not going to disagree with that. I mean, that's 100% true. And actually, I want to take it even a step further and say the disrespect for intellectual property is a tremendous issue in any industry that has this problem. I mean, just tremendous issue. And you can actually even see it in crypto. I think part of the reason that people are so extractive in this industry is because doesn't matter what you invent. Somebody else, because it's all open source, somebody else can copy it immediately. So unless you have the strongest morals, and you're a top 5% in terms of ethical fiber of being, your job is to invent something and then extract as much money as possible from it as quickly as possible. Because in 6 months, you're going to have 300 billion different copycats using your technology and trying to steal your clients. So the idea of invent something and then get wealthy, that's what makes capitalism work. I actually think it's much harder to make capitalism work in a world where you don't have strong intellectual property laws, because then you just incentivize, you disincentivize actual invention. You incentivize waiting around for somebody to invent something and then ripping it off and having large distribution systems and pushing it out there as fast as possible.
Basically, what I think in a nutshell is that if the rest of the world is going to have a pretty easy choice to choose the country with a strong legal system over the country with an arbitrary Xi Jinping's brain determined, set of rules, and basically, like, against that backdrop, the United States has a choice. We are the world's biggest customer. So what kind of customer do we want to be? Do we want to be the type of customer like my former customers in a region which shall go unnamed that gave, basically we would buy $60 oil from them for $50 a barrel, They would give up $10 a barrel. They'd give up almost 20% of the value of every barrel just by being idiots on every single trade. Or so do we want to be a customer that's that dumb and gives up that much value, that much edge? Or do we want to be a customer like Walmart that just like haggles their suppliers down to the bone, to the point where if you sell goods via Walmart, if you put your stuff on Walmart's shelves, you're making the thinnest possible margins that you will tolerate because they have haggled you down until you're ready to walk away, right? And I think that like I sense where all of this is going is the latter category, right? Like we keep the strong laws and we become a slightly tighter customer that gives away less edge. In the meantime, there's going to be a tremendous amount of volatility. Over the medium to long term, I think it'll probably make markets go up quite a lot.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
I think Quinn had a tweet today about how the S&P still has basically the same earnings expectations and multiple as it did at the beginning of the Trump presidency. If you think the tariffs are going to stick around for a while, you have to revise that lower. Like the multiples have to come in because the margins are going to shrink for these guys, because I don't think that they can pass the entire cost on. I think that some of it will come out of, I mean, and even if it doesn't, right, they're going to sell less goods. But I do think at least some percentage of that's going to come out of the margin, and so that's going to re-rate. And maybe once that happens and the data comes in, then I can start to be ridiculously bullish, and hopefully that's in the next month or two. I mean, I'll just go back to the basics here. When it comes to trading a market like this and investing in a market like this, you only ever play at the extremes. Just don't touch the market when it's in the middle of a range.
That's why I don't want to sell anything. Like I don't want to sell any of my Hyperliquid right now. I kind of respectfully disagree with what you were suggesting earlier. I feel like we're in the middle of the new range.
Yeah, I was thinking more from the buy side. From the sell side, it's like if you're up 50% on a position in this type of range, like maybe sell a little bit. If you're up 10-15% on Bitcoin, okay, maybe sell a little bit. Of what you bought. Like get that cash in your account and redeploy it when something absolutely nuts happens.
That's fair.
Because I guarantee you it will. I actually think that right now this $84,000 on Bitcoin is a horribly unstable price. I actually think basically every price on the market right now is a horribly unstable price, and that for whatever reason vol isn't, I think, at the money vol is 48 on Bitcoin. That doesn't really make a ton of sense to me. Either way.
That's about the same as crude oil vol. I mean, look, let me be a little vulnerable with you, Avi. We're friends. I can tell you how I can be vulnerable with you. I think I'm really good at knowing what to do in the immediate term. Like just what to click on. If something's about to get absolutely daddied, I can get out of it. If something's about to rip, I usually have a sense for that. And over the long run, like my macro theses have buoyed, a nice, healthy 2-decade long career. So I'm pretty confident in myself there. I kind of suck at the medium term. Like I don't really okay, Bitcoin's trading 83. I like, what is 78, or is 78 next, or is 90 next? Like I'm so blind there. And that is like you have so much strength in that category. And this is why I really enjoy these conversations. Like as much as I am long-term bullish, and that leads me to want to just try to find entry points in this market. Like you said, there's tons of volatility and cause for concern. Like, for example, the New York Fed survey of consumer expectations, like percentage of people expecting higher unemployment in a year rocketed over the course of the last week. New York Fed survey of consumer expectations, like, hey, are you somewhat or much worse off in the next 12 months than you were before? That one rocketed over the last week. Like inflation expectations are rocketing. Credit card balances are rocketing. Like all sorts, people you read stuff on Twitter about people like using buy now, pay later to buy their Coachella tickets. Like it's getting like there's some leading indicators that are showing some, predicting some really like savage, uncomfortable near-term volatility. I personally don't know how to navigate that. I'm just kind of like waiting for lower lows to try and buy more. If the market really roofs, maybe I'll take some stuff off. But right now, I'm kind of in my blind spot here. So I respect what you're saying, and I people who have your strengths, I would recommend they lean into them. But recognizing your weaknesses is an important part of trading as well.
Thank you for your vulnerability, Jonah. It's very, 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 very touching to tell me that you are less good at a somewhat useless skill. That doesn't matter that much in the long run.
What, range trading? Are you kidding me?
Very, very, very.
Range trading is
I've made the vast majority of my money, on longer term trades. To be completely honest, this is just one of those things where you kind of just have to wait and see. Like I'm not calling for 90 and I'm not calling for 75. I'm just saying, there will be vol, so be ready for it, but be ready to be aggressive when the market gives you the opportunity to be, and you just can't be aggressive if you're already fully deployed. The other thing that you have to that you have to pay attention to is dislocations in a market like this. There's an interesting trade once Ohm started to get liquidated over the weekend. If you understood why that was happening, you could have caught the trade and experience like you could have shorted something and it's down 50% in like 15 minutes, which wasn't so bad. This is the type of market where dislocations like that will happen, where things that are weak will kind of blow up, because there's kind of in a not, you kind of need, you need a bullish market to prop up a scam. And a lot of things break when there's not enough capital in the system as well. And so these things are just stuff to look out for, I would say. It's definitely right now a reasonable market to trade day to day. But my focus right now is just on accumulating those pairs, and then every now and then, if you see something, you can really attack it.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets.
So what are you looking at any indicators for, I know that you're like buying kind of like call options on projects shifting their tokenomics, and you're doing that via pairs trades against ETH, which I think is very intelligent portfolio construction. I'll tell you what I'm looking at as like a breakout indicator for the whole market when big capital inflows come in and support the valuable projects, the Bitcoins of the world and the scams alike. I know I've talked your ear off about the BTC SPY ratio, but I think it's smarter to look at IBIT versus SPY, the ETF, because they have the same open and close. They're both New York hour products. And we're in a solid uptrend. And I think if IBIT SPY, which is currently trading 0.09, if that approaches or breaks through the cycle highs, which would be 0.1, I think that will be a signal to the participant base that Bitcoin is decorrelating to the upside. And I think that's when capital really starts to flow into crypto and we can start to see some mania-like moves again. What do you think?
Yeah, I think it's like, as you always say, it's good to watch the SPX BTC ratio.
Any others we should be looking at?
The one that really baffles me right now is Bitcoin Gold.
Mm.
I mean, gold has just been on an absolute tear, and I think a lot of it is people searching for a new reserve currency. A lot of it is, in a multipolar world where you can't rely on the hegemon to keep a stable currency. What do you do? You buy gold, and if you look at Bitcoin, Bitcoin's done reasonably well relative to equity markets. I mean, you see a massive equity market collapse, and Bitcoin, holds up okay from what was it, from the peak to trough on Nasdaq. Nasdaq went down 25%. It's pretty nuts, huh?
Yeah.
From peak to trough on BTC, we went down 32%. That's pretty damn good. It's a pretty damn good ratio for an asset like this. And I do think a lot of that was also because a ton of people were in the market trying to buy and like pushing it up to that 109 level because there was just rampant speculation on the SBR, which turned out to be false. So like I would classify, I would really think about it without that. Like, how much did Bitcoin go down because equity started collapsing? That probably started at 96 down to 74, which is only 23%. So if you really think about this, Bitcoin's performed extremely well.
Yeah.
And I think a portion of that is people allocating to Bitcoin for the longer term in the same way that they're allocating to gold. If that wasn't happening, I would have expected Bitcoin to be back in the 60s with S&P crashing so hard. I mean, look, Nasdaq is down to it got down to January 24 prices. It got April 19th when Bitcoin was substantially lower than it was today.
I mean, this is telling you this is part of the extremely bullish long-term story for Bitcoin. Just back to gold for a second. Like, there's one big actor buying a lot of gold right now. It's the People's Bank of China. Like, they publish their reserves and they've been adding to their gold reserves for 5 consecutive months now. And I think part of this is like they own a lot of US treasuries. Mm-hmm. As the US and China go through this ugly divorce, China's selling off its US treasuries and they have to put the money somewhere, right? And there aren't a lot of alternatives right now. So they're really stashing physical and financial gold on their balance sheet. That's going to continue. And China alone can push the price of gold up quite a lot. I'm not a particularly good gold trader. I wouldn't, mm-hmm. I did call this trend, but I'm not like heavily invested in it personally because it's not a market that I follow the way that I like to in order to invest heavily in something. But ultimately, like, yes, gold will continue to go up. I think Bitcoin is ultimately a much better alternative reserve currency than gold. Gold had its heyday. Also, gold can literally trade sideways or down for decades. Like, Maybe Bitcoin can too, but it hasn't yet. So I have a lot more confidence in Bitcoin, like catching up with gold than I do with gold.
I'll just leave you with this, and I'll ask you to think about it. We are in the midst of a generational shift in economic policy and general approach to geopolitics. We are genuinely entering into a time of multipolarity. I think that warrants a decade-long gold bull run. I mean, that's just my take.
Yeah, but what does that look like? Like gold might double in a decade, but Bitcoin could 10x.
Yeah, I'm not saying that gold's going to outperform BTC, but I mean, it has been doing extremely well relative to BTC, and that's because why? It's the first place that people go.
Yeah.
Right. Bitcoin is not. It's going to take longer for Bitcoin, which has been around for 15, 16 years now, to replace something that has been traded for 5,000 years. It's going to take a lot longer than 15, 16 years. It might take 20.
Yeah, I'm kind of hoping it takes 5, but that's good. Maybe I should go and buy a little more gold. I don't have enough to move the needle. I still think though,
make sure some of it's physical.
If gold sells off 60%, it's going to be at basically around $2,000 an ounce, which is a level that 3 years ago would have been considered like screamingly expensive, all-time highs in nominal terms. If Bitcoin sells off 60%, I think that's kind of a level where you look at it and you say, this is the best trade of a lifetime. So that's kind of your downside, I think, for both assets. Upside for gold is like a 2-bagger over 5 to 10 years. Upside for Bitcoin's like a 5 to 10 bagger over that same time period. So to me, the risk reward looks better in Bitcoin, but I will concede that gold has more of a track record.
It's also portfolio construction, right?
Yeah, they're decorrelated for sure.
It's gold is up 10%, Bitcoin's down 25%. Wow, you can buy a lot more Bitcoin now if you rebalance your portfolio. Some of that has to be taken into account, which is what I personally did that. I regret this, but I sold gold to buy BT because my gold position had just absolutely this is one of those times, by the way, I wish there's better way for me to tax loss harvest, because I sold gold for a profit and bought BTC and I'm down. So I might have to get in and out of that thing to take some losses.
You can move to the US version
because on paper
boy,
this year. Anyway, what I was trying to say is that at some point I think that trend's going to reverse, but at least for the next 6 to 12 months, I'm very bullish on gold and gold miners as well. And don't forget, you can buy options if you really want to be crazy and get juiced returns on gold. And the other thing is, I just think that there's also a higher probability of gold going up than Bitcoin, because gold
over what time frame?
In the next year or so.
Really?
I think there's probably gold is up from this point, I think, in probably 80% of the scenarios, and Bitcoin's up probably in like in 60% of the scenarios.
I see what you mean now.
Right. So that's why I like it as part of the portfolio.
I agree. I touche on portfolio construction. I totally concede that. I think your expected value of percentage returns is higher for $1 in Bitcoin than gold, but I will concede that it's going to be a much more volatile journey in Bitcoin than gold. And it makes sense to add gold to the portfolio to diversify and give your book a higher Sharpe so that you can take bigger drawdowns in Bitcoin, which has the bigger upside potential. That's a very smart point.
And then reallocate.
Yeah.
Okay. Can we end the podcast there? Jonah called me smart, everybody.
You are smart. We all love you, Avi. That's why we keep you on here. The committee of people
who's we? This is my podcast, Jonah.
It's my podcast. Love you, man. This is a good one. Let's definitely wrap it there
fun.
before we start saying dumb shit.
I'll see you soon.
See you soon. Later.